Hot inflation data is weighing on Wall Street. That's our top story today on the Wall Report. I'm your host, Greta Wall. The Labor Department's Producer Price Index hit a new all-time high this morning, surging 9.7% year over year in December. Now, that did come in slightly cooler than the 9.8% expected, and the index rose 0.2% monthly. But the data is seen as a forward indicator for consumer prices, as producers do pass on those higher wholesale prices to purchasers in the form of higher prices for their goods or services. The data is weighing on the tech sector, with the Nasdaq and the S&P both falling while the Dow is up. Boeing is helping to boost the Dow today, with the plane maker rising more than 3% following a Bloomberg report that its 737 MAX could return to service in China later this month. Now, Bloomberg cited an operational readiness flight conducted by Hainan Airways as a signal the plane is nearing its return in China. China's Civil Aviation Authority previously issued an airworthiness directive for the MAX on December 2nd. That directive gave airline operators instructions on the necessary changes they needed to make in order to be able to fly the planes in China again. The 737 MAX was grounded globally in 2019 following two fatal crashes. And Delta Airlines is up today after the release of some strong Q4 earnings this morning. Delta beat expectations on both the top and bottom line in the last 3 months of 2021. The company also maintained its 2022 forecast despite projecting a loss in the first quarter due to the spread of Omicron. Delta has been hit hard by staffing shortages caused by employees testing positive for COVID. Those shortages have forced the airline and its peers to cancel tens of thousands of flights over the past month. CEO Ed Bastian said 8,000 Delta employees have tested positive for COVID over the past 4 weeks. That's more than 10% of its total U.S. workforce. Now, the company does expect Omicron to dent its performance in Q1, especially here in the month of January, but they are predicting a strong rebound in travel starting in late February, and that should keep them on track for their previous profit forecast for all of 2022. And as many employers do struggle with staffing shortages due to Omicron, weekly jobless claims rose unexpectedly last week. The Labor Department reported 230,000 Americans filed first-time claims for unemployment benefits, up 7,000 from the previous week and higher than the 200,000 forecast. Now, this is not seen as a result of Omicron, as unemployment claims measure layoffs, not those who are out sick, but it just adds to the struggle for employers who are dealing with staffing issues due to widespread sick calls. Now, continuing claims also fell by 194,000 to 1.6 million in the week ending January 1st. That's the lowest level since June of 1973. And as Treasury yields spiked in the first 2 weeks of the year, so did mortgage rates. The 30-year fixed rate averaged 3.45% this past week, which is the highest since March of 2020. That's up more than 1.2% from this same time a year ago. The 15-year average also spiked to 2.3%, up 19 basis points over the past week. Mortgage rates typically do track with the 10-year Treasury yield, and higher rates will squeeze buyers who are already struggling to afford homes in the tight housing market. And while home buyers are facing the prospect of higher payments due to those higher rates, renters in Manhattan are being squeezed. The net effective median rent in Manhattan hit $3,392 in December. That's the highest level ever recorded in any month of December in history, and is up 21% year over year. Now, this jump comes after many landlords were forced to slash their rent prices in 2020 as renters fled the city for the suburbs. But as life returns to normal, prices are rising sharply and quickly. Rental brokers in New York City say demand has now surged to unprecedented levels, driven largely by college graduates getting jobs in Manhattan. At the end of 2020, the vacancy rate had surged to 11%. The average is about 2%. Now, though, stands at just 1.7%. And before I go, a quick look ahead to tomorrow, as Q4 earnings season unofficially kicks off with the big banks. JP Morgan Chase, Wells Fargo, and Citigroup I'll be reporting earnings before the market open. Shares of all three banks are up in today's session in anticipation of those reports. Analysts are expecting strong guidance from all the big banks this earnings season as the Fed prepares to tighten. Banks do typically benefit from higher interest rates as they boost profits on long-term items like loans. Let me know what you think the banks will report in the morning, and be sure you are subscribed to my Coffee with Greta newsletter to get all the details before the market open. There's a link in the description box if you haven't signed up yet. I'll see you all back here tomorrow for the Wall Report. Be sure to hit that subscribe button and the notifications bell before you go.